The other part of why you'd own them is their structure, but that's changing as a lot of their C Corps are buying back their MLPs, and their whole, like, let's spend a lot and return a lot in terms of dividends is changing as they want to live between cash flow. How do you square those two?
Well, so I actually would argue that that structural change is one of the reasons to be buying. You have to be tax sensitive throughout, but the reality is that with the new tax law, there are, I guess, arguments you could make for some of these companies transitioning in their model to a different structure. But what that does is invites new investors in. Mm-hmm. And that's what they've largely lacked, is the ability to fund from equity. They have not had the institutional supports. They've relied on a highly, shall we say, volatile and emotional retail investor. Fund flows dried up, and it's become a self-fulfilling prophecy. I think that what you're going to see with more C Corps funding infrastructure is that you're still going to get great free cash flow and therefore great dividend yield, but it will be all in the context of a more sustainable business model. Mm-hmm. Now, when you talk about the issue regarding Permian, there is a lack of pipeline down there adequate for the production that they're doing. But that is not the only story of the MLPs. In fact, the liquefied natural gas story, particularly if you believe, as I do, that our ability to export that will prove to be one of the great growth stories of the next 10 years. We don't have the infrastructure in place. Companies like Enterprise Products out of the Houston area, they're very well positioned for that. It represents a significant growth story in a company that already has tons of distributable cash flow and is a very safe balance sheet.
Jim, do you like energy stocks?
I do, Alix. He lays out a very good case fundamentally. I'll just throw in sort of some broader appeal to the entire group. You know, it's been very underowned. It's been beat up for so long. So if it does start to show positive momentum, there's a lot of portfolios that are going to have to at least reduce their underweights, which could add fuel to the upside. But I think the big thing is we've got an economy that's transitioning the world over from disinflation to inflation overall, and rising yields. And if you think about the character of owning some energy stocks, they they give you some yield, which makes them a little like financials. If yields go up, I think they tend to outperform. They do well if inflation fears continue to intensify. They typically have been an outperformer in that environment as well. And they're a great weak dollar play. The dollar's been weak, and if it breaks to lower lows, it's not only going to push crude oil prices higher, but it's also going to push portfolio managers into sectors that do well with weak dollars. So I think there's a lot of attributes favoring these stocks right now.